I'm so glad you could be joining me for this video. I'd like to talk about a topic that can be a little confusing if you don't understand the mechanics behind it, and that is interest rate. Interest rates are a function of savings accounts, mortgages, car loans, credit cards, things that we interact with in the financial world every single day. And I want to talk about how those work. So they're expressed as a percentage. And if you recall back in your school days, percentages are two decimal places of the whole number. For example, let's say that you have a 2% interest. That is going to be taking your loan amount times 0.02, or in the case of a savings account, the savings balance times 0.02. Seems simple enough. Gets you to your annual rate. What you may not understand is how to calculate for each month how much you will earn in interest or how much you will pay in interest. And here's how this works. You take the whole, so let's say you have $10,000 on a loan and you're paying 2% interest rate. 2% of $10,000 is $200 a year. So that's your total amount. Now you're going to take the 200 divided by 12 because there's 12 months in a year, and that's the amount of interest you will pay in that given month. So if you owe a $100 payment on your $10,000 loan, so in the case of this particular loan, about $16 a month will go towards your interest payment. The rest of your $100 payment goes towards the principal and reduces it by that amount. So $10,000 minus the principal reduction next month times 0.02 divided by 12. So each month, the amount that goes towards the interest actually goes smaller. Now you're paying the same interest rate, but because your loan balance is shrinking, you will pay a smaller and smaller amount. Same way with savings, it's compound interest. So if you get paid 2%, my savings balance of $10,000 times 0.02, $200 divided by 12, comes out to about $16. So the following month, I'll get paid 2% on $10,016 instead of the $10,000. And this carries on each month. The beauty of this is compound interest. When it's in your favor, it's amazing. It's been called one of the wonders of the world because it continues to be a force that will go on and on and on. However, when compound interest is against you, that's when it becomes a real problem. And you see this in loans. That compound interest is actually working against you. So you might say, if I could have a savings with 18% interest rate, I would be blown away. Well, you say, Ken, you can't get 18%. That's true. But your credit card is often charging you 18, 20, 24, 30% on those balances carried forward. And so it's a big deal to understand how interest rates work and how you can get them to work for you. Remember, interest that you earn is a reward, and interest that you pay is a penalty. Thank you so much for watching this video. I hope you've enjoyed it.